In today's video, I'll be discussing how much money you need to invest and some key strategies that you can use to maximize your learning and some mistakes to avoid. What's going on, everyone? Welcome back to Financial Knowledge. If you want to learn more about finance and investing, make sure to hit the subscribe button so you can stay updated with future content. When you first start investing, it can be a big question on how much do you actually need to get started. Do you need several $1,000s, or will just a few bucks be sufficient? Well, the main thing you have to keep in mind when you start investing is that it's really just a learning experience to begin with. Getting used to the idea of putting your money into the stock market and not having a lot of control about where it goes and what happens to it the same way you might if you have it just sitting in a bank in a savings account. The main idea is just to get started. You don't need a lot of money at all to get on your way with your investing journey. Just $20 or $30 is all you need. And even if the share price of the particular company you're wanting to buy is more than that $20 to $30 range, it doesn't particularly matter because you can get fractions of a company. You can buy 0.1 of a share or 0.5 of a share, and you don't have to buy the whole share in order to invest in that business. You just have to put some money into the stock market itself. As the investment grows and you can see that you can make money from investing, then your interest will peak and you'll spend more and more time refining your investment strategies and putting more money aside towards investing, because the more money you have invested, the greater the potential is to make a profit over time. These things naturally grow along with your interest, the amount of money and the amount of time you'll set aside for investing itself. So it's just a matter of starting and not worrying particularly about the amount that you're starting with. Another strategy that I found quite useful is only investing an amount of money that you're comfortable with losing, because the larger the sum that you start off with investing can often make it much more scary. Don't invest an amount that will break your bank and put all your life savings into one company before you really know what you're doing. So having that $20 to $30 price tag is really something that won't break the bank if you lose it, but it's also enough if there is a profit made from it. You can see a tangible result of the money that you've made, applying that profit to the idea that the more you put into that stock or into the stock market as a whole through your investments, that the amount of profit that you can have will also increase, and then balancing the idea of the reward versus the risk and overall the potential profit. Often when people start investing, it's with the intent of growing their personal wealth through other means as just working a traditional 9-to-5 job. Getting used to the idea that you can lose your money and that there can be large fluctuations in the amount of money that you have invested is something that takes time to get comfortable with. I mean, even after investing for quite a few years, nobody likes losing money. One of the biggest factors to being a successful investor, and something that's difficult to come to terms with in the beginning, is weaning yourself off that emotional attachment that you have to your money. And it can be quite challenging because often the money that you have, you only attained it through working, spending hours at the job that you have, and you have to trade your own personal hours in order to get that money. But thinking that investing overall is quite an effective and efficient strategy to increase personal wealth, being able to take risks and being comfortable with the fact that you can lose money, but also the strong reward of gaining more money, is something that takes time to get used to. As you get more and more comfortable with putting your money in the stock market and the risks that can be associated with it, your interest will naturally grow and you'll become more and more involved in investing, reading books, watching YouTube videos, educating yourself about the stock markets, the components that make up the stock market, and what it takes to be a good investor. It's not something that happens overnight, but getting started on your journey is really the key place and the first step that you need to take. Just like when you first start going to the gym, for example, you're not going to become a bodybuilder overnight, but the more time you spend at it and the more time you go, the more effort you put into it, the better and more efficient you become, just like with anything else. The stock market really is no different. It's just a bit scarier because it's your own money. You spend hours at work getting it and you really don't want to lose it. It's also an excellent way to improve personal finance, because when you invest, you're doing it with the intent of making more money, and the more time you spend looking at investing, you see other avenues that you can use to increase personal wealth and overall become more efficient with the money that you have and are able to use your money to make more money. Overall, you shouldn't get caught up in the idea with needing a lot of money to get started. It's just a case of getting started, getting used to the idea that you can lose money, but also the rewards that come with it. As always, I hope you enjoyed the content and you're feeling more confident in putting your money into the stock market and getting started on your investing journey. If you want to learn more about finance and investing, make sure to click the links on screen, check out some more content on the channel. Make sure to leave your thoughts and opinions down below in the comments and let me know what you think about investing and how you felt when you first started on your investing journey. As always, thanks for watching, and I'll see you guys in the next video.